So our idea was simple. Let's try to bring the firepower of the latest AI models into the economic space with the idea of empowering policymakers to make better decisions. So that's what AI economics is all about.
Hello, Gianmarco. How are you? How are you doing so far?
Very good. Thank you, Jericho. Thank you for having me.
Perfect. Welcome to the Leading in AI podcast. So today we have Gianmarco as our guest, and it would be really nice to learn about his professional experience as well as his thoughts about AI. So let's go deeper into the first question that we have, which is mainly about yourself. I see that you've built a career in investment banking in Deutsche Bank in Frankfurt, then consulting in the Middle East, and now leading the AI economics unit at Whiteshield. What has your trajectory been like, and what drew you towards this intersection of economics and AI specifically?
Yes, so I started studying business at Bocconi. My course was actually in finance and economics. So from the get-go, I was more drawn towards the more quantitative side of things. And that's why when I first did my internships, I was trying to find a spot in finance and in banking, for example, at Deutsche Bank there in Frankfurt. When I eventually did my master's degree, I thought it would make sense to explore consulting as a profession, just to have a bit more breadth of opportunities. But still, even when I started consulting, it was with FTI in Dubai. I ended up getting always drawn towards, again, the modeling side of things, the financial analysis side of things, the economic analysis. So eventually I decided that that type of generalist consulting wasn't really my thing. And at the same time, I found an opportunity to join Whiteshield, which is a company that works in the public policy space. So mostly working with governments. And what was interesting to me was that obviously being that type of partner for governments, there was a lot of emphasis on the entire economics policy space and in general, a bit more of an academic orientation from the firm. So when I joined them, I found a lot more space for me to be doing that type of work. And that eventually culminated with the establishment of the AI economics function in the company.
Perfect. That's really nice. So yeah, you mentioned that you built the AI economics team at Whiteshield from the ground up. What does it actually take to establish a new function inside a consulting firm? And what would you say would be the hardest moments in that process?
Well, I would say it takes, first of all, a very brave and trusty leadership team, which give you the opportunity to do so. And obviously Whiteshield at the time, so this was in 2023, was a company that was putting a lot of value in having this entrepreneurial mindset. It still is. And this is less common to find in larger, older, more established firms. So that's the first ingredient, having a company that is, young, agile, and looks for innovation. Then obviously the idea in itself was a fundamental component of it. So at the time, it was clear to me that there was an opportunity to create a centralized function for quantitative and economic modeling within the firm. Just because of our scale, we couldn't afford to have, 50 economists working on modeling. So the bet was, let's only have a smaller team that is a centralized hub for this type of functions. So all the policy analysts don't necessarily have to be experts in modeling. So I would say it's the same thing as being an entrepreneur without any of the hard parts of being an entrepreneur, because you don't have to worry about funding. You don't have to worry about, salaries and any of that. So you can focus on the idea and on the execution.
Great. Great. Sounds really nice. And yeah, you mentioned about AI economics. I would say it's not something, very common to have this sort of practice. Can you explain about what it means in reality? What does AI economics mean?
Yes, it's a term, as far as I know, wasn't really used before. AI economics simply refers to the practice of working with economic sciences, working in economic modeling, but using AI to modernize this type of approach, this type of science. So in practical terms, what does it mean? It means that economics traditionally has been a field where things tend to move quite slowly, meaning that today, for example, the largest organizations in the world, like the Federal Reserve, the European Central Bank, the OECD, they still tend to use economic modeling approaches that are cutting edge for sure, but are based on techniques that are decades old. Obviously, they're very sophisticated. They have massive teams of very talented economists, but fundamentally, they still rely on approaches that are classical in nature. The field of AI is also a field that is not particularly new. AI in itself was born 70 years ago. However, the application of AI into economics is something that has never been explored to the maximum depth. For example, even since the launch of LLMs, you have a lot of applications that came out, use cases around chatbots, text recognition, speech recognition, image recognition. But maybe because economics is such a niche field, there wasn't a lot of work being done on forecasting, simulation, impact analytics, and so on. So our idea was simple. Let's try to bring the firepower of the latest AI models into the economic space with the idea of empowering policymakers to make better decisions. So that's what AI economics is all about.
That's very interesting. That's very interesting. So I see that you worked in public sector and governments, and in the end, governments are sort of slow-moving institutions, right? So what is it actually to deploy these models or these AI tools that you have to the public sector? And what do you think would be like the main constraints versus, for example, the private sector?
Yeah, look, traditionally, this is true, but I would make an exception here. As Whiteshield, we mostly work within the Middle East, or at least traditionally that has been our core market. And within the Middle East, countries like the United Arab Emirates, Saudi Arabia, and all the other countries in the GCC are in fact characterized by governments that are extremely agile. So your typical ministry in the United Arab Emirates is probably faster in decision making than an established European private sector firm. So that, of course, makes it a lot easier. On top of that, these countries have very extensive and ambitious AI transformation programs. So obviously, we've seen programs like NEOM in the past. We've seen the broader 2030 agenda in Saudi Arabia. We've seen recent plans in the United Arab Emirates around economic development. And AI is no different, meaning that, for example, Dubai was one of the first, if not the first, government in the world at the Emirate level in mandating every public entity to hire or nominate a chief AI officer. Right. For example, right now, there's another program in place in the UAE where every government function, 50% of all government functions will need to be automated by agentic AI within the next few years. So that's a massive program. Therefore, for us, that is very fertile ground because we have the capabilities and the experience working with private sector, approaches with public sector for many years. And there's also demand from these players, these entities, because they are exactly looking to enact that type of AI transformation. So all in all, I would say this would not be the case in Europe or in North America, probably, but in the Middle East, it's very pleasant to work with the public sector. Now, that said, we also work with private sector institutions, although that's a smaller part of our portfolio. And the same is true, meaning that I do observe that private sector institutions in the Middle East also tend to be more agile than their counterparts in Europe, be it for regulation, be it for the market that is probably a bit more competitive, or maybe just a cultural thing where there's more attitude towards trial and error rather than having a perfect plan before starting the implementation.
Yeah, that's really nice. I would say in the Spanish public sector, I would say there's a lot of bureaucracy right now. But now, for example, I know in Catalonia, they assigned a new director of AI that we can see now more advancements when it comes to adopting AI in the public sector. But yeah, I would say it's something emerging. And I see that there's a huge difference between what's happening, at least in Spain, which basically it's the place that I know, versus UAE and the countries nearby.
Yeah, every market is very different. And Spain, in any case, among European countries, is one of those that is moving the fastest. Also, since a few years, thanks to the massive investments from the European Commission, every country in Europe has moved to start initiatives in the AI space, or at least in the digital space. So it's a good moment everywhere to work in this field. And yeah, and Middle East maybe just a bit more than the others.
Yeah. Perfect. Now, going back again to AI economics, by basically doing some reading, I saw that you use sort of unconventional data like satellite imagery to generate policy insights. Can you give us a brief example of what this looks like without going to the details?
Yeah. So look, it connects to the idea that I was describing earlier, that traditionally economic analysis is a process that is quite slow and heavy. For example, the typical OECD economy like the United Kingdom or Italy or the United States will have a pretty large statistical office. And the typical statistical office is a massive organization, thousands of people that you need to hire, statisticians, economists, analysts, and requires a huge budget, well over $100 million a year to run. The other problem with that is that before you get any results from establishing a massive statistical office, you need to wait years, typically 2 to 3 years, before you get a single useful new insight out of it. Why? Because these offices rely on surveys, other type of data collection methods that are slow. They're very accurate. They're the most accurate, but they're also quite slow. Now, the premise is that if you're an emerging economy, even a very fast growing emerging economy like those that we see in the Middle East, to be fair, they're already advanced. It's not even fair to call them emerging, but they're moving very rapidly. And until 20 years ago, these economies didn't have proper statistical institutions. And even the ones that they have today are not as established as the OECD ones. Now, if you are one of those countries, you don't want to waste 3 years in building up your own capabilities. Or even if you do that, you want to have some results in the immediate term. So what's the solution? The solution is to combine to the traditional economic analysis and the traditional statistical analysis, something different, something that is more fast-paced, higher frequency. And that is essentially the category of exotic data. So exotic data is anything like data that you get from social media usage, sentiment analysis, data that you get from vehicles moving with their GPS on, satellite imagery, footage from cameras that are in the streets and maybe attached to a traffic light, or even signals from the market, like signals from real estate transactions, signals from the stock market. The difference is that these type of data points are not traditionally linked to economic indicators in the same way that your demographic surveys are. But that doesn't mean that you cannot establish a connection. And that's what we do. So we take exotic data and we use AI to find what's the link between those indicators and the economic output that we're looking for. In the case of satellite imagery, what's the breakthrough? The breakthrough is that since a few years, AI models have become really powerful at computer vision, really powerful. Now, computer vision was always there, but it has improved dramatically. And what also improved dramatically is the quality of the satellite imagery. So if you go on Google Earth and search for any country and you go back 50 years, you will see that the pictures are really, really low resolution. And if you look at 10 years ago, you will see that they're getting better. But if you look at how the pictures look today, the resolution is now really high. So today you have satellites that are able to capture images at a resolution of 10 centimeters in some places in Europe, or 30 centimeters, which is the current best quality you can get in the Middle East. So with 30 centimeters, it means effectively you're able to see a person from space, right? With this type of capability, we load a city, a satellite imagery for an entire city in our models, and we ask the models to tell us what's in this picture. Do you see buildings? Do you see cars? If you see buildings, what is this? Is it a factory? Is it a house? Is it an office? Is there a park? Is there a road? How big is the road? Are there boats in this port, etc.? And we combine millions of square kilometers of this data and compare it with economic data. So we know, for example, in this city, there's a port and there's these many offices and there's these many factories, and that's the GDP. And we run this over for many countries. And in the end, we are able to know, having one more building or one building less, how does it impact GDP, essentially? Now, this is simplified, but then you can get into, for example, the industry-specific applications. You can assess, as we do, the quality of roads from space without having to send inspectors anymore. You can see if constructions are moving at the right pace. For example, if you're doing a project like Vision 2030, without having to send people. You can see if the movement of people before and after an event implies that these people, on top of buying a ticket to the World Cup, for example, are also going to stay in the hotel in that city or going to restaurants, which has an impact on the economic activity. So there's a lot of insights that can be captured from this, and it's just enabled by a simple mental switch, let's say, from the traditional way of looking at things to a slightly more creative one.
That's nice. I've never heard about this concept of exotic data. I think for me, it's very unique. And also I see that the technology that you have is very proprietary and very complex, that I think it's, I guess it's your competitive advantage at this point, right?
Yes, exactly.
Perfect. Now moving on to another topic, I see a few months ago that you launched the Global Labor Resilience Index at Davos alongside the World Economic Forum. Can you briefly explain about the core message of the index and what would be the next steps, no?
Yeah, so the Whiteshield has been present at the World Economic Forum every year since many years. And traditionally, every time we go there, we present a publication, which is, in this case, and in the last few years, has been the Global Labor Resilience Index. We have a number of authors that helped us publish this, including one of our directors, Christopher Pizzarides, which is a Nobel Prize winner in economics. And in this version of the Global Labor Resilience Index, we explore a topic which is the convergence of two trends: economic growth driven by technology, technological disruption or technological development, and shocks related to trade. So what's happening? What's happening is that 2025 particularly was a year where you had massive growth in AI, companies moving very fast in AI adoption, a lot of differences between countries, with some countries being at the forefront and other countries lagging behind. But at the same time, you also had massive disruption on the trade side. So the tariff war, some countries fully relying on imports and exports being heavily impacted. Other countries, a bit more resilient because of their network of partners. And so these are effects that can converge, but they can also diverge, meaning that you can be a country that is very unlucky from a trade perspective, but have a very thriving AI ecosystem, or the reverse. The key insight of this edition of the GLRI is that you need to try to combine both things. So the resilience of your labor force, meaning the resilience of your labor market, of the people working in your economy, depends on both. So it depends on, number one, being able to continuously do upskilling of workers, adapting the occupations, giving them the best tools to be, to increase their productivity every year, empowering the firms with incentives to invest in technology and assets. But at the same time, create the conditions from a trade perspective to have a resilient network. So differentiating your partner network, creating unique advantages in your local hub so that even when there are disruptions, you are not too impacted and more. And so what we've seen is that while some of the countries that used to be at the top of the list, still end up being some of the most resilient, there have been changes. For example, the UAE has moved up the list quite substantially because, of course, they're investing a lot in AI, but also because their trade and logistics strategy of establishing themselves as a hub in the Middle East has been helping them when the trade disruptions came in. So that's in essence the entire point of that publication.
That sounds very interesting. Now, moving on to the last questions, I would like to focus more on AI, LLMs, and AGI. So it's something that we discussed in the past, but some people believe that LLMs will keep scaling towards AGI, but others think that we will hit these diminishing returns and we will need a fundamentally different technology to get there. Where do you land on that debate? Where's your position?
Yes. Look, I don't know if AGI was achieved or not. I guess it kind of depends where you place the goalpost. For sure, the level of AI that was reached recently is outstanding. Models like Fable 5 are just incredibly powerful. And maybe no one a few years ago would think that we would get to this level yet. But to me, the point is slightly different, meaning that the current approach towards scaling these models is a brute force approach, meaning just give it more data, more computational power, and more energy, and they will get better, which is true mathematically. It's also true that it conflicts with diminishing returns. To me, what we're trying to do now is we have already maximized the performance of this model in the things that the models are good at, like coding. They're already much better than humans. They're thousands of times better than humans. Now what we're doing is we're trying to make the models extremely good at things that, humans are usually better at. For example, just conversation or thinking. And there are elements where you see that the amount of energy that they require to be able to perform a simple task is just disproportionate. So for me, the consideration on energy is important. Why? Because if you think about it, the human brain uses very little energy. The typical human with 2,000 calories a day is able to perform a huge number of computations all the time. So our human vision compared to computer vision is extremely efficient. So to me, the whole point is that after we reach such a level with LLMs, the next step will be enabled by switching a bit the investments towards something else, which to me could be world models. World models that are fundamentally models where you're not asking the AI to figure out all the rules of the game. You're not asking the AI to look at, for example, an apple falling 1,000,000 times and figure out what's the equation. Because you already know the equation. So you're just going to tell, look, this is the gravity equation. So all this energy that the AI has saved in figuring that out is a massive gain from an efficiency perspective. And this is a bit how the brain works, meaning that as humans, we learn a concept once, and there are concepts that for us are particularly easy to understand that for LLMs are not. So to me, moving towards world models becomes interesting because you will be able to capture the best of both worlds. The part where the humans have already figured it out and the part where the humans are lacking, which is the huge computational power. And there are already entities that are working a lot on this. The former head of AI of Meta has famously transitioned towards world models a few months ago. And this is a field which is showing a lot of promise. For me, particularly, I think world models are very interesting because they are in a way compatible with what we're doing within Whiteshield and AI economics, meaning that we do not rely on brute AI force to figure out economic and policy problems. We combine the expertise, so our board of directors, our leaders, people that have been working in economics and public policy for decades, and we bring in the computational power of AI to augment that. So that's where the opportunity lies for me.
Wow, that's very interesting about the world models. Actually, I think it's very connected to my last question. But yeah, so basically, we have a sort of a signature question, which we ask every guest. And our question is like, where do you think AI will surprise people the most in the next 2, 3 years? Do you think the world models would be the next big thing in the next 2, 3 years? Or do you foresee other type of technology that do you think it's more feasible in the next years?
Yeah. I think that the next big thing will be robotics to a large extent are something that is very connected and compatible with world models. Obviously, the field of robotics in itself is pretty advanced right now, but the missing piece is that the cost of hardware is still very high. However, we're starting to see this year robots, devices that start to become accessible, even companies exploring subscription models. So the capabilities in some cases are still raw, although, for example, in the military space, they already reached a superhuman level. But for me, in the next few years, as the cost of hardware goes down dramatically, this will become accessible to the mass population. And with the improvements on the AI side, with the integration of better world models, we'll really start to see, robots among us in the day to day. So that's something that I think will come maybe faster than we expect.
Yeah. Oh, that's very nice. And it's not the first person that told me that robotics would be the next big thing, actually. So I think, yeah, if two people at least say that robotics would be the next big thing in the next 2, 3 years, it's something that we should now take care and consider it as an important technology to adopt right now. No? So,
Yes.
Gianmarco, thank you so much for your time and for your insightful insights. It was very interesting talking with you about AI, about the public sector, about the future of our world. So thank you so much for coming and for accepting my invitation.
Thank you, Jericho. It was a pleasure.
Thank you very much.